Chinese regulators have potentially come out with a solution that could help Chinese companies from being delisted. And that's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in the chat. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel. And this one's very interesting because a lot of you guys are concerned with delisting risks of your Chinese listed securities. Now, I personally own the shares that I own of Alibaba on US exchanges. And so am I really concerned about delisting? Not necessarily. I'm not even concerned about sort of like that variable interest entity thing, because I really believe that there is a strong agreement here that they're not going to stiff the US investors. And if they do stiff the US investors, say bye-bye to ever listing on the most liquid and richest exchange in the world. So I just don't see that happening. But for a lot of you guys, I know you guys are concerned about the delisting risk, especially in terms of like a short-term perspective where the share price could go down because it'd be faced with a more illiquid market. Well, there's some good news for you. Chinese regulators are potentially planning a 3-tier data strategy to help avoid US delistings. And so for those of you guys that may necessarily not remember, Chinese companies have a 2024 deadline to comply with US PCAOB audit requirements. And what that actually is China's preparing to sort US listed companies into 3 groups based on the sensitivity of the data that they hold. So that's effectively a potential concession. And so those 3 tiers are non-sensitive information, sensitive information, and secretive information. So once again, the system is designed to help bring some Chinese companies into compliance with US rules that require public companies to allow regulators to inspect their audit files. Now, what you would think is that it would just be that first tier that would be allowed to list on the US exchanges. Any company that has sensitive information and secret information would not necessarily be allowed to list on US exchanges. And that's what I thought when I originally read this article, but that's actually not the case. And you'll see here, companies in that second category, that sensitive data category, could actually restructure their operations to become compliant, including by outsourcing the information to a third party. So this is very interesting because I thought that this sensitive tier would have to be delisted, but it looks like there's a way to also help these companies stay listed. Now, you would think that that's it, but actually the Chinese regulators are actually proposing a second sort of resolution here. And you can see here that a second significant concession by Chinese regulators is allowing US regulators full access to audit. So it's very clear that Chinese regulators with these 2 items listed in this video are working really hard to ensure that their companies do not get listed from US exchanges. And so what that tells me is that China's working really hard to maintain those ties. And so this is a real positive development, and it sort of works counter to sort of the media narrative right now that is suggesting that US and China relations are souring. Now, I've also said that there are things that cause the US and China relations to sour, but I always say that effectively, I think it's very important for these 2 nations to be friends. And so I really hope that the US audit regulators sort of see this and work with them as well. And you guys are well aware that a mass delisting would represent a significant step towards economic decoupling of the 2 countries. And so I just don't think that should happen. And you can see at the bottom that under the tiered scheme, low-risk data companies could make their audit records available to the PCAOB right away. That low-risk category would probably include retailers and restaurant chains. So my question is that Alibaba? I don't think so. I think because Alibaba owns Le.me, because they have that cloud business that could potentially have some secretive data or sensitive data, plus they have a lot of consumer financial information on as well. So I actually believe that Alibaba might fall into that second tier. So yeah, they have to make some potential changes, but I do believe that Alibaba effectively will not get delisted. Now, it's interesting that US officials are actually skeptical that Chinese companies will meet the full transparency standards. And so we'll see how this plays out. I actually think they do, but it looks like there have been ongoing and productive discussions between US and Chinese authorities. However, YG Fisher, the director of the Securities and Exchange Commission, said that there's significant issues that remain and time is running out. And that sounds a little bit scarier than what I think will actually end up happening. There's absolutely nothing stopping US regulators for just bumping that deadline if Chinese companies are making significant strides to address this issue. There's a lot of money at stake for US trading companies, and I just don't think that the banking lobby will allow this to happen. But you never really know, and I don't really know how much of a percentage of total trading revenues or total iBanking revenues the Chinese listed names actually make up. Probably a small percentage. So the banking lobby might not even care. So who knows what happens, but it's my perspective that it actually works in the favor of everyone if you just allow these companies the right time to get this done, even if it goes past the deadline a little bit. And this is what I mean about the delisting risk being overblown. Tencent actually trades over the counter and it's just fine. Notice their run up in the share price from 2020 to 2021. Obviously, post 2021, the Chinese tech crackdown actually caused the shares to more than cut in half. So that's an issue. But effectively, Tencent is trading the way that they should be. They do have that China discount, of course, but they're trading. Another name that trades over the counter that you may not necessarily be aware of is Volkswagen. They also trade over the counter. So it's not a death blow if these companies trade over the counter. Your brokerages would make it available to trade. So what does this news actually mean to my valuation for Alibaba? Ultimately, a delisting of Alibaba does absolutely nothing to my valuation. There's still a material disconnect in the intrinsic value and the current share price as shown by in my model. Company's trading at $100, it's worth 300. The story is pretty simple. Now, if you want access to that model, you can get access to it at the lower tier of the Patreons. And if you want to join us for an epic live presentation every month, you can join us at the upper tier of the Patreon. Now, there's some interesting stuff happening for Alibaba. There could potentially be lower tariffs in the US imposed on China, which would be very good news for Alibaba in this environment. And I actually made a whole video that covers that, which you can get to right here.